Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever time zone you are tuning in from. Well, as always, I'm very excited to welcome you all to another promising edition on the Forex Morning Mastery. I do hope we all had a wonderful weekend out there. Well, for me, it was quite short. I was very busy indoors all weekend as I had a lot of work to do. How was your weekend out there? Hope you had a splendid and wonderful weekend. And how well are you prepared for the new week? I hope you're really pumped up as we begin to see some interesting trading setup, latest development in the financial market, which we are going to be looking at today. Well, my own name is Sheriff Daramola, and for the next 50 to 1 hour, I'm going to be your host as I will be taking you on a trading journey where we will be evaluating the financial market through the lens of both technical and fundamental perspective with the utmost intent of strategically positioning ourselves for the next move. Well, what do we have here? I can see a bunch of comments here from Torres Master. Good morning to you. You're very much welcome too. Hello, Constant Tamiklo. Good morning to you too. I see you C40 as well. Good morning. Glad to have you around with us this morning. Um, okay, who else is here? Oh, very glad to hear that, Tamiklo. I also had a splendid weekend too as well over here. For those of us who are joining us for the first time, who may be wondering what this is all about, well, the Forex Morning Mastery is an avenue where we all come together 3 times in a week, Mondays, Wednesdays, and Fridays, to do follow-up details on the assets I usually share during the weekend. So during the weekend, I usually share a couple of assets which details my insight into what I think is likely going to happen in the new week. And of course, during the Forex Morning Mastery, as technical traders, we come here together as a community and engage in follow-ups and reviews of the current trading positions in preparation of both the London and the New York session. And it's important for you to note that this is not a signal service platform, but instead an avenue where we all come together to have a deep understanding into what is really going on in the market using price action based technical analysis in conjunction with the fundamental perspective of the market to position ourselves for the next move. And this platform also serves as an educational tool for a deeper understanding into how to use price action based technical analysis in conjunction with fundamental factors to understand the behavioral patterns of market participants at every given point in time. So our aim here is to equip ourselves with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you will become at comprehending my analytical approach and of course utilizing that information to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. And that reminds me, don't forget to give the video a thumbs up if you have found this content helpful and useful in making your independent trading decision. I really appreciate your support. Click on that like button and thank you very much as you do so. So with that being said, here we will be diving right into the business. In fact, we have some new development in the market, and since the new week has begun, the US dollar has been doing very well. And it's not coming to us as a surprise, as we all know. We listened to the Fed chairman's speech last week where he emphasized that they will be keeping interest rates unchanged, that is higher, for an extended period of time, despite the soft US CPI data, which came in below market expectation. The PPI data also came in below market expectations. So before we go into those details, let's quickly, as usual, run through the fundamental factors that will be influencing the sentiment in the market today, and in fact for the first half of the week. And of course, we all know by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to strategically position ourselves for the next move, maybe prior, during, and even after this economic event. Now, for this week, we are going to be looking at 3 financial instruments as always, which includes the USOILSPOT, the GBPUSD, and of course my favorite, which is the XAUUSD, popularly known as the gold spot. And based on this asset we are looking at, we are going to be focusing on economic features from both the United States and the United Kingdom economic docket. Now, putting this into perspective, we usually focus on high impactful event due to the tendency of this event bringing in liquidity into the market. However, on days like this, when we do not have any high impactful event, today June 17th, we do not have any high impactful event, we are going to be including the mid-tier economic features so that we can have a broader view into what the market participant will be looking forward to as a yardstick to make an informed trading decisions. And after putting this into perspective, we have 3 mid-tier economic features coming up today, and the first one here is coming in about 2 to 3 hours from now, and that is the New York Empire State Manufacturing Index. Now, this is a survey conducted by the Federal Reserve Bank of New York, and it gauges business conditions within the boundaries of the New York manufacturers. And generally speaking, a positive result today is going to indicate a bullish sentiment for the US dollar, while a negative result shows a contraction in the manufacturing sector, which could dovetail to a negative traction against the US dollar. Now, we all know how sensitive the manufacturing sector to the United States is, and of course, this also will be one of the indicators that majority will be looking at today to decide if they will continue to buy the US dollar or not. Now, if we look at the previous month, that is the month of May, the data came in at minus 15.6, as you will see here. And economists are projecting that the data for the month of June will come in slightly higher than the previous month, and they are projecting a deficit of 13. Now, we are going to be looking forward to what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then later on today, in about how many hours is that? I think about 6-7 hours from now, we are going to be having a couple of speeches from the Fed Reserve officials, and this is one event everyone will definitely want to be looking forward to. And one important thing about this event is how it will, whatever these Fed officials say today, will be giving market an insight into the economic outlook of the United States, the health condition of that economy, and of course future perspective into the monetary policy decisions of the Federal Reserve. So it's another event that everyone will definitely want to be looking forward to, especially after the Fed chair last week did acknowledge the fact that inflation is gradually thinning out, and that they will still need some labor-oriented data to further confirm that truly this is the case before any consideration of interest rate cuts before the end of the year. Now, we are looking at the Fed Williams speech coming in about 6-7 hours from now. Fed Williams is the Federal Reserve Bank of New York president, and he's also a serving member of the Federal Open Market Committee, which of course, whatever he says today will be carried a lot of weight. Then we are going to be looking at Aka, who is the Federal Reserve Bank of Philadelphia president. He also participates at the Global Interdependence Center's 42nd Annual Monetary and Trade Conference. So is also going to be giving a speech today, so I encourage us all to mark out the timing, and if I can have an highlight into the speeches, I will definitely share them with you on my Telegram platform. So these are the events we are going to be looking forward to today, and of course we all know as technical traders, the anticipation of this event has a way of influencing the sentiment in the market, where we will be seeing this reflect on the chart as price action. So we are going to be going right into the chart right now to see from a technical perspective what is really going on, how the market participants are behaving, and using that historical data to strategically position ourselves for the next move. So with that being said, let's dive right into the business. I see you I see you, my namesake Sharif Abdul Kadiri, good morning to you. I see you, Richard Blackett, good morning. And I also see you, Wokocha, good morning to you too. Yes, I love that spirit, Richard. Yes, let's make it another profitable week. And here we go. So the first asset we are going to be looking at for today, as always, is going to be the USOILSPOT. And on the USOILSPOT, though I had a buy position triggered a couple of hours ago, but my position has been taken out as I moved my stop loss to break even, taking me out at break even before the session began. So we are going to be looking at what is really going on in this market. Remember, last week we were able to scoop in some significant amount of profit. Remember, we rode the bearish momentum at the beginning of this month, down, scooping over 320 pips, and of course throughout last week's trading session we have been buying the USOILSPOT all the way into that $79 area, and since price action tested that $79 level, we have noticed the emergence of a consolidation phase which may likely transition in or evolve into an uptrend continuation pattern. We never can tell yet. It could transition into a trend continuation pattern, and it could also be the beginning of a reversal setup, which could incite a temporary sell-off, which could be the retracement of that impulsive move we have enjoyed in the last 7 to 9 days. Now, before we go into the higher time frame to have an holistic perspective into what is really going on in this market, it's important for us to also keep tabs with the behind the scenes situations, which that is the market drivers which has been influencing the sentiment in the market so far, and how it is likely going to be influencing the sentiment in the market this week. Now, one of the major major drivers for this week is the demand, the Chinese industrial data, which came in earlier today, and we saw the data coming disappointing. It came in below market expectations, and of course we all know how influential the Chinese economy is to the global oil market. China is considered to be the largest importer of crude oil, and they usually contribute a larger percentage to the total demand of crude oil in the global market. And if the economy is not doing very well, it comes as a red flag that we might be seeing a decline in demand from that economy. And if the economy is doing very well, then we might likely be seeing an increased demand from the Chinese economy. Now, with this data coming in, we are going to exercise patience and see how the market is going to be digesting that information to make an informed decision. Then another major factor that will be influencing the crude oil market is the consumer sentiment index that came in last week. And remember, the data came in below market below market expectation, giving us signs that consumers are not feeling confident in the US economy at this point in time. It fell to about 65.6 despite market expecting something higher than that. And remember, the previous month as well came in below market expectation at 69.1. So with this data here, it could influence the sentiment in the crude oil market, where this could lead to Federal Reserve reconsidering cutting interest rates. And we all know if interest rate is cut, the value of the US dollar will drop. And if the value of the US dollar drops, the US oil, being a US dollar denominated asset, becomes cheaper for other currency assets to buy. Now, another important event that could also influence the sentiment in this market is the hawkish signal from the Federal Reserve. We had the Fed chairman say that the Fed monetary policy decision was made last week, where they decided to maintain interest rate higher for an extended period of time. And they did emphasize that they will be needing much more data to further buttress that inflation is thinning out. So they need like a couple of months more, looking at labor-oriented data to decide if they will be cutting interest rate. And this will definitely influence the value of the dollar. As we can see, during the second half of last week, the dollar had continued to gain traction, and we never can tell this traction could continue into this week. And if it continues, it could exert selling pressure on the crude oil prices. Then in conclusion, I will say that the combination of the weaker US consumer sentiment index, the inflation data, the hawkish Fed policies, and the overwhelming Chinese industrial data that came in this that came in this morning could be exerting downward pressure on US oil prices. So with that being said here, let's look at things from a technical standpoint to really understand how market participants are digesting this information, and of course it will be giving us a clue into what is likely going to happen for this week. Now, to understand this, we will be scaling up into the higher time frame so we can have an holistic perspective into what is really going on in this market. Now, for those of you who have been with me for a while now, you will be familiar with the structure we have here on the 4 hours time frame. As you will see, since the month of April, that is the first day of the month of April, the market has consistently and uniformly found lower highs and lower lows, giving us a beautiful descending trend line to work with ahead of this new week. Now, looking at this closely, you will see that after we connected the series of lower highs, we do have a couple of descending trend line to guide our trading decisions. And of course, you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we continue to look out for patterns and structures that support the idea of selling that asset. Now, the only condition that will make us buy is if this descending trend line is breached and broken to the upside. Now, with this information we have here, you will see that during the course of last week trading session, we in fact saw price break out of that descending trend line right here, and we saw a couple of retests of that structure, giving us a sign that buyers are really trying to gain some traction behind the scenes. But in as much as buyers are doing so, we continue to see selling pressure emerge around the $79 area, negating all attempt by the buyers to continue that momentum. Now, the question as we head into the new week is whether the breakout here is a true one or a false one. As you will see, sellers have continued to make a statement right around this area, and it could lead into a situation where price drops back within the descending trend line to continue the downtrend that started at the beginning of the month of April. Now, to guide our trading decisions for this week, we have our key level, situated at the $77.50 level. Now, if you look at this level closely, you will see how it has played a significant role in determining the direction of price action since the month of May. Now, throughout the month of May, as you will see here, the market was finding buy pressure around the key level. As you will see, every attempt by the sellers to break through was always met with strong resistance from the buyers at this point. So with the continued buy pressure around this area, I was able to identify a demand zone between the $76 and the $77.50 area. And not until the beginning of the month of June, we finally saw, I think the last trading day of the month of May, stroke the beginning of this month, we saw the final breakdown of that structure, and then price action did break back above that level. So this key level here is going to be playing a significant role for us this week. And of course, for those of you who have been with me for a while now, you know how important our key level is. As long as price remains above the key level, we'll continue to look out for patterns and structures that support the idea of buying, except in rare cases where we see convincing selling pressure above that structure. However, to sell, we want to see price break down the key level, and of course, if price does so, it will be conveniently below that descending trend line, welcoming selling ideas. Now, for us to navigate this current structure, we will need to scale down into the 1 hour time frame, where we do want to be seeing how the market has been reacting to this confluence since the new week has begun. Now, scaling down into the 1 hour time frame, we begin to see things much more clearly. And as you will see here, this is what I was able to come up with after considering the character of price action in the last 12 hours or so. Now, looking at the structure closely, remember this is our key level, sitting right above that descending trend line at the $77.50 level. And though the week started with a bearish momentum, as you will see, we had a bearish gap, giving us signs that there was a lot of selling during the course of the weekend by institutional traders, and price dropped into the key level. And as soon price dropped into our key level at the $77.50 area, we saw buy pressure resumed, evolving into an engulfing bullish candle, leading to a situation where price broke out of that resistance line at the $78 area. And I did mention earlier that I took advantage of that buy position as price moved about 35 pips thereabout before the sell pressure resumed all over again, taking me out of that position at break even. Now, preparing for today's trading session, we are going to be focusing on this range bound structure, where price was initially confined within the $78 level and the $77.50 area. It's a tight range, a 50-cent range bound structure we have here. And this further emphasized the prevailing uncertainty before the breakout of the structure happens. And usually, you know how we treat our range bound structure in this community. If price still remains within the range, we exercise patience and wait for the market to finally make a decision to see where price will be going. And of course, what we normally look out for is either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, with the situation here, I still maintain my bullish bias above the $78 area, so I have my re-entry in place with the hopes that price action will continue the momentum, since we have a breakout of that $78 area. And if the momentum continues, I will be looking out for more opportunities to buy at the $79 area. And of course, if there are interesting setup and convincing situation that shows that we have an opportunity to add more position, I will definitely let you know in the comment section of both my TradingView and Telegram platform. However, if the contrary happens here, and instead selling pressure persists and continues to price continues to find series of lower lows and lower highs, then the breakdown of the key level and the support line of that range bound structure will give us an opportunity to sell. Now, if we are selling at below the key level at the $77.50 level, there is a caveat to the structure. We want to ensure that we are around to continue to monitor this price action. Now, why is that so? Remember, we have this descending trend line we marked out on the higher time frame. It could serve as a retest of structure to continue the uptrend move. So because of this, as soon as price gets close to this descending trend line, we ensure that we move all our stop losses, secure the current sell position while we wait and see how the market is going to be reacting to the trend line. Now, if it so happens that we have reversal patterns like buying pressure, like double bottom structure, whichever case it may be, then this could incite the trend continuation to the upside. But if price breaks down the trend line, then this will be a good opportunity to add more sell positions to our existing trade. So let's see how the market is going to play out here today. I still have a strong feeling that the price will continue to the upside, but we keep all our options open. Should price drop, we are going to be on standby to capitalize on that move. So this is my simple trading setup on the US Oil Spot for the first half of this week. So let's see how the market is going to play out. I encourage us all to mark out these levels accordingly, as we will be needing them as reference point to guide our independent trading decisions. If you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. So with that being said, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And if you have found this content helpful, do not forget to give that video a thumbs up. It's very valuable to me, and I really appreciate your support. For those of you who had clicked on the like button, thank you very much. And for those who are yet to do so, please do. This is the cheapest way you can support this community to grow. And let's make the likes tally with the number of people on board. Thank you very much, and see you in about 15 seconds. Cheers. All right. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page, so we can move on to the next asset on our watch list for today. And I do hope you've marked out those levels accordingly. Very, very important. We need them to guide our independent trading decisions. So the next asset we are going to be looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And before I even go further, I would like to reiterate that I will only be focusing on the 1 hour time frame, which is our execution time frame. I already done a top-down analysis on this asset during the weekend. I hope you've watched that video. If you have not, please do, so that you can have a background knowledge on how we got to this point you are seeing on the 1 hour time frame. And if in any way you missed out on that video, you can check the link right in the description box of this current video after the end of the live session to acquaint yourself with the latest development from a technical standpoint. Now, right here on the 1 hour time frame, I already shared an update this morning as regards to how we are going to be managing our positions for this week. And in fact, we saw the British pound nosedive during the later part of last week. Remember, we were buying the GBPUSD as at the beginning of last week, where we scooped in over 100 pips from multiple entries before the bearish momentum happened. And we were actually thinking that the momentum will continue due to the lower than expected CPI data, which reveals that there is a disinflation going on in the United States. However, the comment from the Federal Reserve chairman did not help matters at all for the pound sterling, as they confirmed that they will be maintaining interest rate higher for an extended period of time, waiting for convincing data to further emphasize that truly inflation is gradually thinning out. And of course, the US economy is looking forward to more labor-oriented data to before deciding to cut interest rates. Then another hawkish surprise was the projection of only one interest rate cut for this year 2024, compared to what the Fed chair said in about 2 or 3 months ago in the month of March, where he did reiterated that they are going to be witnessing 3 rate cuts for the year. But a sudden twist has shifted the sentiment in the market right now, where we are beginning to see how sellers may have found acceptance below that our key level at the 1.2700 area, which beautifully shares a confluence with that ascending trend line we identified on the 4 hours time frame. Now, with the situation we have here on this chart, things are looking much more bearish, as we're beginning to see the evolution of price action into a downtrend continuation pattern, which could be in the form of a bearish rectangle. Now, if to give a visual representation of what I'm seeing here, you can see that as soon as price tested the 1.26615, we have seen a situation where price has been confined within a range-bound structure since the week began. Now, look at what we have here. We have price confined within the 1.26895 and the 1.26615 area to emphasize the prevailing uncertainty that is going on at this point in time. And remember, this is not coming to me as a surprise. Remember, we are looking forward to some very key economic data this week. I think I did not show you, but for those of you who watch my video on the GBPUSD, you'll be familiar with this. We are looking at the consumer price index and inflationary data from the United Kingdom. We are looking at the producer price index. We are looking at the retail price index. These are all inflationary data, which will be giving us an insight into the inflationary pressure in the United Kingdom economy. Then one of the major highlights for the pound sterling is the interest rate decision coming up on Thursday, June 20th. We are looking at interest rate decision where market are expecting that the Bank of England is going to be maintaining the interest rate, leaving the interest rate unchanged. But there are still some quarters who are supporting the idea that there may likely be a surprise from the Bank of England, where they may reduce the interest rate due to the concerning figures coming in from the labor sector. Remember, we saw the labor data from the United Kingdom last week, all of which came in below market expectation, showing us that there is a contraction in the labor sector. And of course, this is due to the high interest rate, where there has been large layoffs. The unemployment rate is getting higher and higher for the last 3 months, and business owners are shutting down because of the high borrowing cost. It's very expensive to borrow money from the bank at the moment, and due to these factors, we may see the Bank of England consider cutting interest rates. So it's still on the table. We never can tell. There's a dichotomy where there are some people who are thinking that there will be a rate cut. Some are thinking that interest rate will be maintained. So we look forward to see what the data will be. And of course, this anticipation is resulting into this prevailing uncertainty we are seeing in the market right now. So we may likely see some extended sideways trading activity before this data finally comes in. Maybe price continue to fall within this range bound structure for a while before the final decision is made. So because of this uncertainty here, we need to be very, very careful before jumping into sell positions or buy positions, where we need to wait for confirmation, like breakout retest on lower time frame before jumping into a position. That's one. And secondly, if we have a position running, we want to be around to ensure that we monitor that position. As soon as price moves significantly well in our favor, we move all stop losses to secure the position, because we may see price action snap back into this range bound structure we have here. Then some other factors behind the scenes that could influence the sentiment in the market. I think I pulled out some major factors, major drivers in this market, which I would love to share with you this morning, so we can have a look at it together and see what will be influencing the sentiment in this market. Now, we talked about the Federal Reserve hawkish stance. We've talked about that. We've talked about the easing US inflationary pressure and the persistent UK price pressure, where market participants expect that persistent price pressure in the United Kingdom might force the Bank of England to maintain current interest rates for a longer period of time. And then the last one here, which I didn't mention, is the upcoming UK general elections. Now, the UK general election coming up on July 4th, that's about 2 to 3 weeks from now, introduce a degree of political uncertainty, warranting caution before position for any further depreciating move for the GBPUSD pair. So the political landscape could definitely influence the sentiment in the market at this point. But from a technical standpoint, I still think that the path of least resistance for the pound sterling is looking bearish, considering the hawkish remark and the resilient nature of the US dollar. So as a result of this, I do have a sell stop order sitting below the 1.26615 area, where I'm looking to join a bearish move. And as soon as price moves significantly, let's ensure we move our stop losses, secure the positions while we wait and see how the market will play out. However, if it so happens the price action will break out of the resistance line, and then I will want to see some confirmation, like price action retesting the structure before joining that move. And if price gets into retesting the trend line that I was broken last week, remember this is the ascending trend line we identified on the 4 hours time frame. So as soon as price gets there, or even close to that structure, we move our stop losses, secure the position, and wait to see how the market will react to that confluence, because it could be a retest that could incite the downtrend continuation. So let's see how the market is going to play out going forward. Trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us update as at when due. So this is my simple view. If you have any questions whatsoever, or you need some further clarification, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And some of us are yet to click on that like button. Please do. This is the cheapest way you can support the channel to grow, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial, and thank you very much as you do so. And for those of us who had clicked on the like button, thank you very much for your support. I really do appreciate. So let's see if there are any questions before we move on to the final asset on our watch list. I will be right back in 15 seconds from now. All right. So in the absence of no questions, we'll take this as a confirmation that we are good to go. So with that being said, let's move right into the final assets on our watch list for this week. So the final asset we are going to be looking at today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And we're beginning to see some interesting situation unfold on this chart right now. And for those of you who saw my video during the weekend, remember price action is currently sitting at on a robust demand zone, a zone which has been a key determinant of buying pressure in the last couple of months, I guess. For the sake of clarity, let's look at this together. So I will just scale up into the 4 hours time frame, and of course you will see here that since the month of April, let me extend this out a little further. Since the beginning of the month of April, this level here had negated all attempt by the sellers to break through that structure, making it a robust demand zone between the 2,275 and the 2,300 area. And of course, it doesn't make sense that we look out for selling opportunities, especially when price action is sitting on a robust demand zone. Well, except as rare cases where we see significant confirmation that truly sellers are building a momentum. And in fact, last week we also capitalized on some couple of buy positions from that demand zone as well. And the scenario continues as sellers found it difficult to break through that area. Now, like I said in my video on the XAUUSD, though since price action tested at all-time high record at a 2,450, we've seen series of lower highs giving us a descending trend line, but the fact still remains that we are yet to see a lower low to really confirm that sellers are getting stronger. Now, for the fact that price still remains above this robust demand zone, the path of this resistance is still looking very, very bullish. Now, if we consider the fundamental factors behind the scenes, let me share with you what let us look at the major drivers for this week on the XAUUSD. One of the major ones is the Federal Reserve hawkish stance, where we did learn that the Federal Reserve is going to be maintaining interest rate for an extended period of time. Then the idea of reducing the rate cuts from 3 times that was projected at the beginning of the year to 1 for the year 2024 is another positive news for the US dollar, which could incite buying of the US dollar. Then besides this is the inflation data and rate cut expectation, to which I've talked about countless of times today. And then we also have the US economic indicator. We are looking forward to some we saw some reports from last week which was not impressive, from the CPI data to the PPI, and of course the consumer sentiment index, all of which came in below market expectation, projecting the idea that Federal Reserve may likely consider cutting interest rate anytime soon. So we still cannot take the possibility of an imminent interest rate cut lightly. Then finally is the geopolitical tensions and the political uncertainty in Europe from France, and then we also have the geopolitical tensions in the Middle East, which could drive the appeal for safe haven assets such as gold. So we have factors here that support a bearish bias, and of course we also have factors that support a bullish bias. But if we look at the chart, we will see how the market has digested and are trying to respond to this market dynamics by looking at the things from a technical standpoint. This is what I was able to come up with for this for today. And if you look at what has been going on since the beginning of the week, you would notice that the momentum has been looking strongly bearish, as we saw price started the week at around the $2,333.50 level, dropping down into the $2,315.50 level, where since we have noticed buy pressure emerge from that particular area. And considering the fact that price is sitting above a robust demand zone, I still think that price has a higher chance of continuing the upside. Now, in addition to this observation is this ascending trend line connected after we saw the series of higher lows since last week Friday. And of course, you do know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that support the idea of buying that asset. Now, since price action tested the 2,315, which is the first support line for the week, look at how beautifully it shares a confluence with that ascending trend line. So because of this, I'm of the opinion that we might be seeing another situation where price will respect the ascending trend line to continue the momentum to the upside. Now, if you remember, if you watch my weekend video on the XAUUSD, remember we had this descending trend line after connecting the series of higher lows, and look at how it shares a confluence with that $2,323.50 area. So what I'm looking at here is that price breaking out of that descending trend line, and that $2,323.50 level will be all I need to continue the uptrend move. And if price continues to climb, find new highs, a breakout of the $2,333.50 level and the key level at the $2,335 area will be welcoming more buy positions for me for this week. So let's see how the market is going to play out here. I still have all the strong believe that price will continue to the upside. However, in as much as we are looking out for more buying opportunities at this juncture, we cannot ignore the potentials that sellers could also come in. And in fact, for me to sell, I would like to see some significant confirmations on the chart, like series of lower lows and lower highs on my lower time frame, maybe the 15-10 minutes time frame, for me to convince me that I want to be selling. Now, one of the things I will be looking out for is, first of all, price breaking down this ascending trend line. That is one. And then secondly, price breaking down this support line for this week at the $2,315.50 level. So if I see price do something like lower lows and lower highs before the breakdown of the structure, I will be placing a sell stop order below that area. Then I will join that move. Now, if we join that move, please, we should note that price is still sitting on a demand zone, and let's ensure that we are around to move our stop losses, securing the sell position as price move south. So if price moves south, move your stop losses accordingly, secure the position. I will not be having multiple entries on the sell position just because price is still sitting above that demand zone. So this is what I'm looking at for today. Well, I still have a strong feeling that price will go up, but let's see. We only want to respond to the conditions that the market is presenting to us. So let's see how the market is going to play out around here. I encourage you to mark out these levels and trend lines, as we will be needing them to guide our independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. You might need some clarification or any questions as regards to the financial market. I'm here and willing to be of help in that regard. So let's see if there are any questions. So I will be taking the next 10-15 seconds off while you also use that time to mark out these levels accordingly on your chart. See you soon. All right. So, in the absence of no questions, I guess we are all good. All right. I see you, Constant Tamiklo. Thank you very much. So, in the absence of no questions, I just want to assume that we are all on the same page. And I still await your likes. We have over 16 people on board, and the likes is still way below the 10 mark. So please support this project by giving the video a thumbs up. Thank you very much as you do so. So it's on this note we have come to the end of today's Forex Morning Mastery, our first edition for this week. And as always, we were able to take on the 3 financial assets we are going to be monitoring for this week, which includes the USOILSPOT, the GBPUSD, and my favorite, the XAUUSD, popularly known as the gold spot. And in fact, we were able to identify simple trading setups using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And I do hope you marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do is exercise patience and allow the structures to mature. And while we do so, please always note that remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. Now, as a result of this understanding, let's ensure we have a well-defined risk management strategy in place to protect our portfolios against sudden pullbacks. So it's on this note. Okay, I see your comment, Tamiklo. Oh, all right. Thank you very much for that feedback, Tamiklo. I really appreciate that. That must have been a typographical error from the part of my team. So it's on this note I would like to call it a day. And for those of you who joined us for the first time, I didn't forget you guys. You guys are wonderful. I'm very glad to have you around with us today, and I do hope you are able to gain 1 or 2 things from what we discussed here. And if you did, trust me, the more time you spend with us, the better you get in understanding our analytical approach, which eventually will help you in making your independent trading decisions. And I look forward to seeing more of you same time on Wednesday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course as we prepare for the second half of the week, which is likely going to be bringing some positive traction into the market due to the anticipation of the Bank of England's interest rate decision. So I look forward to seeing more of you. And that reminds me, we are going to be running the XAUUSD live monitoring window later today. For those who don't know, it's a platform where we come together to monitor real-time price action on the XAUUSD. So it usually starts about 5 minutes after the New York session begins, and it's going to be running for about 5 to 7 hours depending on the volatility of the market on that day. So today, join us on that session, and for the link, you will definitely see it at the end of this video. So once the session ends, you will see the link. Please click on the link, click on the notify me button so you can get notified as soon as we come on live. So I look forward to seeing you all in that session. And it's on this note I wish you all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.